How's it going, folks? This is Stock Ninja. Welcome to the first episode of Who Beat the S&P 500. Who Beat the S&P 500 will be an educational video series that provides some background and insight on individual stocks that have outperformed the S&P 500 in the last 20 years. We will look at revenue streams, past performance in market downturns, current management, and the largest institutional holders of the stock at this time. When asked the question, what are the best stocks on the stock market? Most people would immediately respond Amazon, Netflix, Google, essentially the FANG stocks. This is all well and good if you're only looking to invest in the technology sector. But remember, there are 11 total sectors in the stock market, and diversification is key in protecting yourself from underperformance in any one sector. So once again, welcome, and thanks for joining me on this journey to find some stocks that have beaten, and in some cases outright crushed, the broader market. I will use an initial cost basis of $10,000 for each comparison. With that in mind, if you had invested $10,000 in the SPY, which is the ETF that tracks the S&P 500 index, on May 23, 2000, you would now have $25,651.17. That is taking into consideration that dividends were not reinvested. And let's assume everyone watching is a savvy investor and would reinvest the dividends. So, with dividends reinvested, you will have a total of $30,610.72. That works out to be an average annual return of roughly 5.75%. Pretty good, right? Now, let's compare that to today's case study stock. If you were to invest the same $10,000 in that stock with dividends reinvested, you would have an ending investment of $85,969.30, with an average annual return of 11.35%. Nearly double what the S&P 500 would have returned. What is that stock, you might be asking? For some added fun, you can pause the video and leave a comment below with your guess. Alright, without further ado, it is none other than Waste Management, with the ticker symbol WM. Yes, folks, the company that collects your garbage has absolutely trashed the overall market in the last 20 years. Okay, cool. It beat the market, but how? What do they do that makes them so profitable? Let's dig deeper into this company to better understand their business model and revenue streams to see if we can figure out how Waste Management made this happen. Waste Management was founded in 1968 and headquartered in Houston, Texas. It is currently a member of the S&P 500 index with a market cap of $41.7 billion. It is listed in the industrial sector, and the industry is waste management. Waste Management's business is broken up into waste collection, waste disposal, treatment, and recycling. 55% of their revenue comes from waste collection. The waste collection segment is further broken down into commercial, industrial, and residential services. Waste Management also owns and operates 244 solid waste landfills, along with 5 secure hazardous waste landfills. They also own 302 transfer stations in North America. A transfer station is a building or processing site for temporary deposition of waste, often called waste transfer stations or material recycling facilities. Waste Management also generates revenue through recycling. The recycling segment can be broken down into materials processing, recycling commodities, and recycling brokerage services. As you can see, they have every aspect of waste covered, from leaving your trash can to being treated and being properly recycled, making money along the way. Let's now look at how Waste Management performed in the last 2 recessions and during this current downtrend. Looking back at the dot-com bubble crash, Waste Management declined an astonishing 78.66%, compared to the SPY's 50.66% decline. In the Great Financial Recession, Waste Management declined 47%, compared to the SPY's 57% decline. During the current downtrend, both the SPY and Waste Management declined roughly 35% and have since recouped those losses. Stock price is usually an indicator of how successful a management team is, especially at the CEO position for any particular company. The current CEO of Waste Management is James C. Fish Jr. Fish Jr. took over the leadership role on November 11, 2016. Since then, the share price of Waste Management climbed roughly 59% to its current price of $98.92. Lastly, let's look at who currently owns Waste Management in their holdings. Leading the pack with an 8.34% stake is the Vanguard Group. As Waste Management is considered a more defensive stock, this ownership stake makes sense, given the nature of Vanguard funds being used in a lot of retirement accounts. You can also note the Bill and Melinda Gates Foundation also owns a sizable portion at 4.4% of the company. The love for this company by the Gates family does not stop there. The Cascade Investment LLC is actually the investment vehicle that Bill Gates himself uses, giving the Gates family an actual 7.84% stake in the entire company, second only to the Vanguard Group. Overall, Waste Management is a solid company with a business that has a lot of security in its operating nature. Clearly, they have been impacted by recessions, but the bounce back has been more substantial in comparison to the overall market. That wraps up our analysis of Waste Management as a company and the overall performance of the stock in the last 2 decades. If you would like to know if Waste Management is a buy today, please watch the Learn to Invest's latest video on the company, where he generates an updated valuation using the discounted cash flow valuation method to determine the intrinsic value of the stock. The link is in the description below. Thank you for watching. If you like the content, please like and subscribe to the channel. Till next time, Stock Ninja out. I am not a financial advisor, and this video is for educational purposes only. Please do your own research before buying and selling any stocks seen in this video. Thank you.